ladies and gentlemen, and welcome to the Talk Shop Show. Today, as usual, we have a very special guest. We have Malcolm Stoffman from the Mortgage Guy, Malcolm the Mortgage Guy. I'm here as well with Erica Aguilar, the Senior VP of Complete CU Services.
Thank you very much. My name is Erica Aguilar. I am delighted to be here with Malcolm Stoffman, the Mortgage Guy. Have you seen any different pattern in, let's say, your ideal or your overall client? Have you seen a different or the same, I would say the same pattern with the clients? Like, do they want to consolidate more debts? Are they more into getting a second mortgage? Like, is there any way that you will describe the pandemic have effect within the industry and how the borrowers are acting?
So I would say, again, if we go back to a year ago, it was a very strange market a year ago. Last year at this time, it was a race for people to get cash now. There was so much uncertainty that if you were in any kind of uncertainty, you were trying to lay your hands on cash now. So I was doing a lot of refinances and a lot of second mortgages a year ago. Even though the lenders tightened that up to some extent, there was still money out there. And, you know, if you were a small business owner and you didn't know how long the government programs were going to last, you were trying to leverage your house to get that cash in your bank account, so you knew that you had cash to survive this. That sort of slowed down through the summer, and once everybody kind of recognized, okay, the government programs are here to stay, they seem to be supporting us to some extent, and you know, things kind of opened up a little bit over the summer. That's when we saw a real uptake in purchases, and then sort of a more traditional refinances as rates dropped through the summer and into the fall, and even into I guess early in 2021. We're starting to see rates heading back up right now, but early in 2021 they were at about as low as they've absolutely ever been. And a lot of So the other thing that I would say that I'm seeing is a lot of probably new real estate investors, right? So people buying second properties that are rental properties, people buying multi-unit commercial properties, or small, or I guess like small commercial properties or large residential properties, 4 units, 6 units, 12 units, you know, 3-story walk-ups, those kinds of properties. All of a sudden, all kinds of demand for that through the fall and into early this year, with rates as low as they had been. That seems to, and again, I mean, I'm only looking at, you know, my business, and obviously, you know, at a more macro level, that may or may not be the case, but certainly from what I've seen and from what my team is experiencing, and other people that I'm talking to in the industry, that's fairly consistent with what everybody has seen. Right now, we seem to be ramping up towards the spring buying season. The market is absolutely as hot as I've ever seen it for residential properties, and I would say the biggest thing that I'm dealing with, or not the biggest thing that I'm dealing with, but one of the biggest things that I'm dealing with right now is how people are offering and how realtors are encouraging people to make offers on properties. I have always said that it is essential that you put a condition of financing on any sale or any offer that you're making for the purchase of a property. And I say that simply because no matter how good your credit is, no matter how good your income is, if you put if you put an offer in on a property that the lender doesn't like at the end of the day, it doesn't matter how good your credit is or your income is. There is that third piece of the puzzle, and that is the actual property itself. And I'll give you a perfect example. I'm working on a file right now where this is a house in Hamilton, but it's 474 square feet. The client is fantastic. The client's got a great credit score. The client's got great income. If he wouldn't have put a condition of financing on this property, we would have a heck of a time financing this thing right now, because most mainstream monoline or bank lenders aren't interested in 474 foot or 474 square foot properties in the north end of Hamilton, right? Like that's just the reality of it.